Silver just surged to $78, and every serious investor has their eyes locked on it right now. But here's what the mainstream conversation is completely leaving out. The exact conditions that powered this rally are also the ones capable of unwinding it, fast. A delayed military strike, a narrow waterway that dictates global oil flows, and one decision from one man that flipped market expectations overnight. From the outside, this rally looks like a gift. But underneath the surface, pressure is building, and the vast majority of investors won't feel it until the damage is already done. Welcome to CSC Alert, where we don't follow the headlines, we pull them apart. This is your home for serious, grounded economic analysis, made for the kind of people who think before they move. Before we go any further, if you're not yet subscribed to CSC Alert, let me ask you something. Remember how your grandfather made a ritual out of reading the morning paper every single day without fail? That's what this subscribe button is. Don't miss an edition. Go ahead and tap it now. We'll be right here. And that notification bell? Think of it as your personal early warning system. When something significant shifts in the markets, you'll know before almost anyone else. Not second. First, we're genuinely glad you're here today because what we're about to unpack could directly shape how you think about your next financial move. This is not background noise. This is CSC Alert at its sharpest. Now drop a comment. Where in the world are you tuning in from? Your city, your country. We read them all. Let's see just how wide this community has grown. The markets opened without fanfare that morning. Everything looked routine. Traders settled in, monitors glowing, scanning numbers the way they did every day. Then within a few hours, something changed. Something that caught even veteran investors off guard. Silver moved. Not in a slow, measured way. It launched. The price climbed to $78.30, marking the day's session high, a number that immediately grabbed attention across trading floors, financial desks, and portfolio rooms around the world. And Jugan was watching every single tick. For weeks leading up to that moment, silver had been weighed down. Climbing oil prices, stubborn treasury yields, and a geopolitical environment that refused to settle, all of it had been acting as a ceiling on the metal. Plenty of analysts had essentially written off any meaningful near-term recovery. They were wrong. The move started in early U.S. trading hours. The first buyers in were the bargain hunters, the patient ones who sit on the sidelines for weeks waiting for a pullback worth acting on. When they saw their opening, they didn't hesitate. Their buying created the initial upward push on silver's price. But bargain buying alone doesn't power a move this sharp. There were other forces working behind the scenes. The US dollar slipped that day. The dollar index pulled back to 98.98. On its own, that might sound unremarkable. But in commodity markets, small dollar moves carry outsized consequences. When the dollar softens, silver becomes more affordable for buyers holding other currencies. Demand ticks up. Prices follow. This isn't a new dynamic. It's one of the most enduring relationships in global commodity trading. And on this particular day, it played out exactly as it always has. Gold was doing its own thing simultaneously. Spot gold crossed $4,250 per ounce and kept climbing, eventually settling near $4,265.40, a gain of more than $24 in a single session, up over 0.5%. The precious metals space, broadly, was coming alive. CSC Alert had been monitoring all of this with discipline. Our audience understands that raw numbers are never the full picture. Context is everything. And the context layered behind this move was far more complex than most mainstream outlets were choosing to explain. Silver also made a meaningful dent in its gap with gold. The gold-to-silver ratio, a closely followed metric among experienced investors, landed at 58:91. That figure means it took roughly 59 ounces of silver to equal the value of a single ounce of gold. For seasoned market watchers, this ratio is a live conversation about whether silver is cheap or expensive relative to its yellow counterpart. At 58.91, that conversation wasn't going anywhere. Platinum and palladium, meanwhile, painted a different picture. Both edged lower. Rhodium sat flat. That divergence deserved attention. It told you something important. This wasn't a rising tide lifting the entire precious metals sector. The rally was selective. It was targeted. And that made it fragile. Jugan noted that carefully. A rally with no broad market confirmation is a rally that earns scrutiny, not celebration, not panic either, just calm, structured, honest analysis. That is precisely what CSC Alert is built to deliver. Oil was adding its own complication. Crude had climbed above $100 a barrel, briefly touching $108 before pulling back. Elevated oil feeds inflation. Inflation feeds uncertainty. And uncertainty historically drives capital towards safe haven assets like silver and gold, so oil was part of the fuel powering this rally. But here's where things get complicated. The same high oil prices helping silver climb were simultaneously squeezing the broader economy. Consumers were getting hit at the gas pump, businesses were absorbing higher operating costs, and central banks were being forced to rethink everything. The Federal Reserve, which had spent much of early 2026 leaning toward rate cuts, was now staring at a very different reality. Markets were beginning to price in the possibility of a rate hike before year's end. That shift, quiet, technical, almost invisible to the average person, was on the verge of changing everything for silver. And Jugan already knew it. Most people looked at that silver rally and exhaled. Jugan looked at it and went quiet, because in his experience, the most dangerous moments in any market aren't the crashes. They're the rallies that feel too clean, the ones that draw investors in on confidence and excitement and hope, right before something underneath them gives way. And what was forming beneath silver's price that day wasn't a base. It was a fracture. The first crack was buried inside the oil market itself. Crude had pushed above $106 a barrel during the session. At one point, it touched $108. For anyone watching the news casually, that registers as a fuel cost headline. But for the kind of investors CSC Alert speaks to, that number carries an entirely different weight. High oil isn't just an energy problem, it's an inflation problem. And inflation problems have a very specific, very painful effect on non-yielding assets like silver. Here's the mechanism. Silver doesn't pay interest. It doesn't generate dividends. It holds value, or loses it, based on what the broader economic climate is doing. When oil drives inflation higher, central banks respond by raising interest rates. Higher rates make bonds and savings instruments attractive. And when those become attractive, capital moves away from silver. The logic is cold. The math is simple. The consequences for silver holders can be severe. Jugan walked through this clearly for the CSC Alert community, not to trigger fear, but to build clarity. Because clarity in a volatile market is worth more than any prediction. Then came the second crack. This one originated in Washington. The Federal Reserve had spent much of early 2026 sending dovish signals. Rate cuts were being discussed. Markets had already priced them in. Gold and silver had benefited, in part, because of those expectations. Investors pour into precious metals when they believe borrowing costs will fall. Lower rates weaken the dollar. A weaker dollar strengthens metals. That chain reaction has repeated itself across decades of financial history. But now the chain was reversing. Fed funds futures, the instruments traders use to bet on the direction of interest rates, were beginning to price in a rate hike before the end of 2026. That shift, quiet as it appeared on the surface, represented a fundamental change in market thinking. Jugan had seen this pattern before. He knew exactly where it led for silver. The CSC Alert audience was reminded of a critical truth at this point. Markets don't move on what's happening right now. They move on what investors expect to happen next. And right now, those expectations were quietly rotating. The same investors who had been accumulating silver on rate cut optimism were beginning, slowly, privately, to reconsider. When that reconsideration becomes consensus, it doesn't produce a gentle correction. It produces a sharp one. The dollar index, sitting at 98.98 that day, had contributed to silver's intraday strength. But a softer dollar isn't a permanent state. It breathes, it shifts, and every credible analyst in the room understood that if the Fed delivered even a firm hint of a rate hike, the dollar would snap back almost immediately. And a stronger dollar, as history has shown time and again, is silver's quiet adversary. Platinum and palladium were already sending the signal. Both declined that session, not dramatically, but the directional message was clear. When closely related metals diverge from a leader, it usually means the leader is running on borrowed energy, not genuine sustained demand. Jugan paused on that point deliberately. Borrowed momentum always gets paid back. And the Strait of Hormuz, a thin stretch of water controlling nearly 20% of the world's daily oil supply, was about to send a signal that no investor was fully braced to receive. There is a place on the map so small that most people could cover it with a thumb. But remove it from the global equation and the entire world economy begins to bleed. The Strait of Hormuz, a narrow corridor sitting between Iran and the Arabian Peninsula, roughly 21 miles across at its tightest point. Through that sliver of water passes close to 1/5 of the entire planet's daily oil supply. Every single day, tankers moving in silence through a passage that has recently become the most closely monitored and most quietly feared lane on Earth. And on this particular Monday, that strait shifted to the center of everything. Jugan had been tracking the Hormuz situation for weeks. CSC Alert had covered it more than once. But what emerged that day didn't simply add pressure to the markets, it restructured them. For silver investors sitting comfortably on the back of a $78 rally, what was about to surface was not reassuring news. Iran made the first move. Senior security officials in Tehran announced the establishment of a new Persian Gulf Strait Authority. On the surface, it read like administrative language, the kind of bureaucratic headline most people skim past. But Jugan read it completely differently, because what Iran was doing wasn't filing paperwork. It was staking a claim, asserting formal institutional control over one of the most strategically vital waterways in modern history. It was signaling to the world, quietly but officially and with full legal framing, that this passage answers to Tehran. The market understood the message, even where the headlines buried it. Oil held firm above $100. The risk premium traders assigned to Middle Eastern instability wasn't shrinking, it was hardening, becoming a structural feature of the market rather than a temporary spike. And that shift was starting to reshape how serious investors were thinking about everything: stocks, bonds, currencies, and yes, silver. Then came the moment no one anticipated. Late in the afternoon, CNBC broke a story that froze trading desks mid-sentence. President Donald Trump, who had been signaling for days that a military strike on Iran was imminent, had made a sudden and striking reversal. A planned operation, scheduled for the following day, Tuesday, had been called off. Not delayed, not rescheduled, called off. At least for the moment. The reason was equally extraordinary. 3 of the most influential leaders in the Middle East had personally appealed to President Trump and asked him to stand down: the Qatari Emir, the Saudi Crown Prince, and the President of the United Arab Emirates. 3 sovereign voices from the region most directly exposed to any military escalation. And Trump listened. He posted on Truth Social confirming he had informed Defense Secretary Pete Hegseth and Joint Chiefs Chairman General Dan Kane that Tuesday's strike was off, but that the military should remain fully ready for a large-scale operation on immediate notice. Jugan walked the CSC Alert audience through every line of that post carefully, because the language is where the meaning lives. Trump did not say the threat was over. He didn't say diplomacy had succeeded. He said serious negotiations are now underway, and he attached a single condition he described as non-negotiable. Iran would not be permitted to pursue or possess nuclear weapons. No exceptions, no middle ground, no flexibility on that point whatsoever. This is where silver found itself standing at a genuine crossroads. Peace negotiations, even serious high-level ones, don't conclude overnight. They drag, they stall, they collapse and restart, and every hour that the Strait of Hormuz remains under Tehran's shadow is another hour that oil stays elevated, inflation stays sticky, and the Federal Reserve stays under pressure to act. For silver, that environment is a minefield dressed up as opportunity. But Jugan raised something that most of the financial press was completely overlooking. Trump's behavior throughout this crisis had followed a consistent pattern. Warnings, hard deadlines, extensions, more warnings. The rhetoric escalated regularly, the action kept getting postponed, and with each postponement, the credibility of the threat itself quietly eroded. Iran was watching, the markets were watching. Both were beginning to ask the same question. Was the clock Trump kept referencing actually counting down or simply running? That question had no clean answer. And silver, caught between a shaky rally and a geopolitical situation with no visible resolution, was heading toward the most decisive test it had faced all year. In moments of market uncertainty, most investors ask the wrong question. They ask, what's happening right now? Jugan always asks a different one. He asks, what happens next? And more specifically, what happens to silver in both directions? Because the most dangerous portfolio is one built around a single outcome. Markets move in scenarios. Right now, silver was sitting at the intersection of 2 very different futures, and each one carried its own distinct version of pain for investors who weren't paying close attention. Jugan laid both out for the CSC Alert community with the kind of precision this situation demanded. No speculation, no drama, just cold, structured analysis anchored in available facts. Scenario 1, a peace deal is reached. On the surface, this is the best possible outcome for the world. For ordinary people paying elevated gas prices, for businesses absorbing brutal logistics costs, for governments fighting inflation, a genuine agreement would be a meaningful relief. But for silver investors riding the current wave, a peace deal carries a sting most haven't considered. Here's why. The moment a credible agreement is signed and the Strait of Hormuz reopens to unrestricted shipping, oil prices fall, possibly sharply. When oil falls, inflation expectations retreat with it. When inflation expectations retreat, the Fed's case for raising rates weakens, but simultaneously, the dollar strengthens on renewed economic confidence. Stock markets climb, risk appetite returns, and when that happens, investors rotate out of safe haven assets like silver and back into equities, growth positions, and higher-yielding instruments. Silver doesn't thrive on optimism. It thrives on fear. And a signed peace deal, whatever its diplomatic value, drains fear from the market almost instantly. Jugan acknowledged that some analysts believe an initial Hormuz reopening could briefly lift all assets, including silver, before the rotation begins. He didn't dismiss it outright, but he viewed it as unlikely to hold, because the underlying conditions driving silver, oil, inflation, geopolitical risk premium would dissolve with the deal, and without those conditions, the rally has nothing left beneath it. Scenario 2, a full-scale military strike on Iran. This is the darker road, and it comes with a paradox that genuinely surprised many in the audience when Jugan explained it. If the United States launches a large-scale assault on Iran, as Trump had explicitly warned and as the Pentagon remained positioned to execute, the immediate market reaction would be intense. Oil would spike. Analysts were projecting a surge toward $113 to $115 per barrel in the short term, potentially higher depending on the scale and duration of any operation. Shipping through Hormuz would face further disruption. Already strained global supply chains would absorb another severe shock. And yet, silver would likely fall, not because war benefits markets, but because a sudden, sharp escalation of that magnitude triggers a very specific investor reflex. It triggers a flight to the US dollar. In moments of acute global crisis, the dollar historically surges as the world's default sanctuary currency. And a stronger dollar, as the CSC alert community now understood clearly, suppresses silver prices even when everything else is burning. This is the paradox Jugan wanted every serious investor to sit with. Silver could fall in peace. Silver could fall in war. The $78 rally that looked so compelling was sitting on a foundation that was shifting in real time beneath it. The gold-to-silver ratio at 58.91 suggested silver still held relative value against gold, but relative value and actual price direction are two entirely separate discussions. Silver had momentum that day. Whether that momentum had durability was the only question that actually mattered. The CSC alert community was urged to avoid the most common mistake in commodity investing: getting attached to a rally because it feels powerful. Power and durability are not the same thing. Jugan closed with a message that was as direct as it was urgent. Watch the straight. Watch the dollar. Watch the Fed. And watch what Trump actually does, not just what he says. Because in this specific chapter of financial history, the distance between those two things could be the difference between preserving your wealth and watching it slowly disappear. Big moves were coming, possibly within days. CSC Alert would be there for every single one of them.